The IRS is increasing interest rates to the highest it's been in 16 years. It's been 16 years. So I thought this is a good opportunity to tell you what the interest rate's going to be. You know, if you saw the thumbnail. And explain how IRS interest rates work in general. How does the IRS set these interest rates? Does it kind of just say, oh, interest rates are going up, let's bump it another percent? No, it's actually in the law, in the tax code, how the IRS determines its interest rates. But let's go over the IRS announcement real quick. Before I actually get into all the law and stuff on how IRS interest rates are calculated. So, interest rates increase for the fourth quarter 2023. The IRS today announced that interest rates will increase for the calendar quarter beginning October 1st, 2023. IRS interest rates are determined quarterly, right? So each quarter of the year, Q1 is January through March, right? Q2 is April through June. Q3 is July through September, and Q4 is October through December. Each one of those periods has a different interest rate, right, that you're charged on your IRS debt. Okay, just FYI. There's different interest rates for different kind of debt, but the one I assume that most folks watching this video is interested in is the IRS interest rates on individuals, right? And the IRS rate on individuals for both overpayments and underpayments. Overpayment is if the IRS owes you money. Underpayments is if you owe the IRS money, is the same, right? And it's going to increase from 7% to 8% in Q4 2023. So yeah, and I bet many of you are wondering about, wait, the IRS can pay me interest? Yes, I will go over that at the very end of this video. But now what I want to talk about is how the IRS actually calculates your interest. Oh, before we do that though, here is kind of on the Department of Labor, they have a table of all the IRS interest rates going back to like 1990, and this is the individual underpayment rates. This is the large corporate underpayment rate. So it's really this first column that you're interested in if you're an individual. And as you can see, yeah, back in the early 90s, it was like, 11, then it kind of got lower. But the last time it was 8% was back in Q4 2007, which was 16 years ago. So just FYI, because as we all know, interest rates were just shockingly low throughout the second decade of the 21st century, and that includes IRS interest rate. So how does the IRS actually determine its interest rates? Well, it's in the tax code. Section 6621, determination of rate of interest, tells you how it's calculated. But before you understand how the IRS interest rate is calculated, you have to understand the short-term rate. Okay, because in a nutshell, the IRS interest rate for individuals for overpayments and underpayments is the federal short-term rate, and I'm going to talk about what that is, plus 3%. Okay? So, the IRS has determined that the federal short-term rate is 5%, so it adds 3% to that. That makes 8%. Okay? So, the question, of course, is, what the heck is the federal short-term rate? Right, and you can kind of see this here, that the overpayment rate established under this section shall be the sum of the federal short-term rate, okay, plus 3 percentage points. And it's different if it's a corporation, but we're just talking about individuals here. And then underpayment as well, right? The underpayment rate established under the section shall be the sum of the federal short-term rate, okay, plus 3 percentage points. And then it defines the federal short-term rate, okay, and it refers to Section 1274D of the tax code. And where do we go here? I think we have to go to D, 1274D. Let's see here. Here we go. It says the federal short-term rate. Okay, the federal short-term rate shall be the rate determined by the Secretary based on the average market yield during any 1 month period selected by the Secretary and ending in the calendar month in which the determination is made on outstanding marketable obligations of the United States with remaining periods of maturity of 3 years or less. So the federal short-term rate for any given month is basically the average yield of U.S. securities, right, like T-bills, with remaining periods of maturity not more than 3 years. Okay, and so what the IRS what the IRS does is it calculates the federal short-term rate for the month that is 3 months prior to the first month of the quarter for which it is determining the interest rate. It determines that rate, right, for that month, and then adds 3 points to that rate. So for Q4 2023, the IRS looks back 3 months previous, okay, so September, August, July to July 2023, determines what is the federal short-term rate for that month, okay, according to this section of the tax code here, right, and then it adds 3 percentage points to that, and that becomes the interest rate for the quarter beginning October 1st, 2023, Q4 2023. Okay. Oh, and under 6621B3, the rate is rounded to the nearest full percent. Okay. So you're not going to get like wonky, because the federal short-term rate by that math, right, is probably not going to be around, a round percent. But you'll notice all the IRS rates are these very round percentages, right? So they're rounded to the nearest full percent. Right, and so last Friday, well, at least last Friday as of the time I'm recording this video might publish later, the IRS kind of mapped this all out in this revenue ruling. This is an advanced version of this revenue ruling, 2023-17. You go down here, right, and it says that, right, the federal short-term rate during July 2023, let's see, rounded to the nearest full percent, right, during the month of July 2023 is 5%. Okay. Doesn't show you all the math, but that's just what they determined. Accordingly, an overpayment rate of 8% and an underpayment rate of 8% are established for the calendar quarter beginning October 1st, 2023. Okay. And then talks about the corporate rates, which is, you're probably not too interested in. So that's how IRS interest rate is calculated. I do want to talk about, let's see, what should I talk about now? So first, I'm going to talk about, can you get your IRS interest abated, right? Because we talked about penalty abatement a lot on the channel, but what about interest abatement? Then I'm going to talk about, when the IRS pays you interest. Okay. So, IRS interest abatement. It's very rare, much more rare than penalty abatement. Now, I will say that the IRS will abate interest on penalties if you get those penalties removed. Okay, interest accrues on penalties just like it accrues on taxes. And if you successfully get a penalty abated, the IRS will abate the interest that went along with that penalty as well. If your liability, let's say the IRS files an SFR for you, right, and assesses this huge, ginormous amount of tax, but then you filed an original return for the year, your actual tax liability is lower, the IRS will adjust the penalties and interest on whatever it charged you, or it will abate both the penalties and interest to the extent that its original assessment was overstated, right, of your liability. There's some other fact patterns too in which you can get interest abated. And those other reasons basically have to do with the IRS making a mistake, okay? So, or if the IRS being unreasonably delayed in the processing of, say a payment or something like that, okay? Basically, the IRS had to make a mistake, and then you can argue based on that any interest that accrued on your account attributable to that mistake by the IRS should be abated. Okay, but it's very narrow circumstances under which interest can be abated. Penalties, you got first-time abatement, you got reasonable cause, right, for penalty abatement, which is much more broader than kind of these reasonable causes for IRS interest abatement, which is very limited to just very specific circumstances. Okay, so much easier to get penalties abated than interest abated. I would probably say for the majority of our clients, maybe not the majority, but a strong minority of our clients, maybe even a majority, I'd have to look, we are able to get some penalties abated and the interest that goes along with those penalties. But it's been only a handful of cases in my career that we've been able to get interest abated. And we generally had to prove that the interest accrual, at least the portion that we're looking to get abated, was attributable to an IRS error. All right, now let's talk about when the IRS pays you interest, because that's fun, right? But in case you're wondering, before I kind of get into the rules of when the IRS pays interest, yes, the IRS will send you a 1099 for the interest it pays you, right? So here's a 1099 that from the IRS that my wife and I got for interest for the 2019 tax year. They paid us $143.50. I don't, man, I should have prepared for this. I don't actually remember why they paid us interest, but they did. And yeah, and you can see that they send you a 1099 right there, Form 1099. So yeah, the IRS, it pays you interest, but you have to pay tax on that interest, just like any other interest you received, except for certain forms of tax-exempt interest, like interest on muni bonds. All right, now let's get into when the IRS would send you, pay you interest. All right, and the IRS answers this pretty plainly on its irs.gov/payments/interest page. And gosh, why did I? There we go. So it answers it pretty plainly here. When does the IRS pay interest? Right. So, because you might be thinking to yourself, well, I file tax returns, but I don't get my my refund for weeks later. Shouldn't it have paid me interest during that period? Well, no, because the IRS gives themselves an administrative time, typically 45 days, to issue your refund without paying interest on it, right? But then okay, so when does the interest actually start? And you have to take into account this 45 days. It's the later of these dates, okay? The later of the tax return filing due date, or the late filed tax return receive date. Okay, so if you file your tax return late, so you file your tax return years late or something like that, the IRS isn't going to start calculating interest from the day the return was due. It's going to start calculating from the day you actually filed your return, assuming you owed a refund, plus 45 days, right, for that administrative time that the IRS gives themselves. Date, we get your return in a format we can process, right? So maybe you filed your return at an earlier date, but it wasn't in a format the IRS could process. Maybe it was illegible or something like this. Or later of the date payment was made. This is pretty rare because usually you would have made a payment for the year. Your payments for the year before you file your return, right? If you're owed a refund, you get your withholding taken out this year, then you file your return next year, right? But theoretically, if you had made payments resulting in a refund after you filed your return, and I don't know why you would do that, because you know how much you owe. Why did you pay more than you owe if you were to pay your tax after you actually file your return? I don't know, but it could happen. So yeah. So I mean, in most cases, it's going to be if you're owed a refund on a return, and the IRS takes longer than 45 days to issue you that refund, then you could be looking at some interest, right, on that refund. All right, folks. I think that's it. Thanks for visiting my little masterclass on IRS interest. I hope you learned a thing or two. Maybe you can go to some parties this holiday season and impress everybody with your knowledge of how the IRS interest rates are calculated. That's pretty awesome, guys. I have some other tax relief videos here on the left-hand side of your screen. If you have a tax problem, unfiled tax returns, lots of back taxes to the IRS of your state, check us out, Choice Tax Relief, choicetaxrelief.com. Give us a call, 866-8000-TAX. That's 866-8000-829. Or like I said, you can visit us at choicetaxrelief.com. Fill out the form or click the link to a free consultation to talk to us. All right, folks, thanks so much for watching. I'll see you in the next video. Bye-bye.